Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, the 29th of March, 2022. I can't wait to say goodbye to March. Terrible month for trading, in my opinion. Volatility, my God, is it volatile. It doesn't stop. You woke up this morning to the ideas that maybe there was a breakthrough in peace talks between Ukraine and Russian envoys. The more I read about it, the more I became convinced that was not the case. Groundwork is being laid. Russia's pulling back, but are they pulling back because they don't want to hurt Kyiv, or are they pulling back because they're bogged down and they might as well throw resources at the Mariupol area and take down that whole swath of the country, which that has been one of their game plans on TV regularly by U.S. military analysts, to say that what they're going to do is create a corridor, if you will, between Mariupol and Crimea. They're certainly doing that. It looks like they're turning their attention there. That doesn't mean that as they win these things, there can't be talks, but I seriously doubt that Putin's doing that. We have another issue coming on the market of the payment of energy in rubles. And Macron, French President Macron today told supposedly Russian President Putin that no, the European Union has contracts where they pay in dollars or euro currency or whatever the currency is, but it's not rubles. And we will see what happens with that. Russia needs the money to keep its military effort going, and the European Union gets about 40% of its energy from Russia. What does it do if it gets cut off? You've got a lot of moving things here. In the gold market, as I said the other day, we're getting a correction. Now, could the market get back to the 18-week moving average of closes at the 1856 level? Well, the answer is yes, it could. The market broke down today, challenged this low that you made here, as you can see, came off that low, didn't plow through it, but you broke the back of the uptrend. Why? Because up until this, and I'll take you to this right now, you had a pattern of higher lows, overall higher highs. When you broke through, just like this today, when you broke this low, you took that out of the equation. Now, where's the market going to? So let's take a look at moving averages. The first thing we do is look back, and we say, okay, it stalled and then it collapsed from the 18-day average of closes. You'll say it's not a collapse. I say it is. 1972.5 to 1893 and a quarter, or 20 cents, is almost $100 an ounce. To me, that's a pretty big price collapse. Where'd the market stop? If you have not taken my enhanced Bollinger Band course, you've got to do that. You've got to learn how to work with these Bollinger Bands, these black dashed lines. At any time during this video, you can take your cursor, move it up. It'll take you right to the page where all this information is explained. Do yourself that favor. I'll put an ad at the end of this so you also understand what I talk about and why this is such an important event. It'll be there. Higher high, lower and low, hit the lower Bollinger Band. That's where the markets typically make their first move to see what's going on. Now, as we can see in the chart, if you get through that number, decide to plunge again, then you get to the 100-day average, 1855.40, which nicely ties in, and I'm going to come back to the weekly chart, of 1856.80 on the weekly chart. So we see there's a lot of support at that particular setup number. The market is oversold, not what I call embedded, and void of trend. Bias down, oversold, hit its first target. If it reaches again, could get into the 1855s. The gold-silver ratio, as long as silver stays over the red line, that's the 18-day moving average, it means it is not as, the strength is to gold, not silver. Yeah, you can drop back and forth, and for the moment silver gets stronger, but it's got to get under this to say, nah, now you're putting the pressure, and really silver is going to get stronger than gold. Where did the silver stop? So let's take a look. This is what the market looked at last night. If it drops, you have 3 points of support. Bollinger Band, first level, 200-day average, 100. That's if it drops from here. It falls apart. Gets right into that combination, comes up a little bit, and you can see what it's doing tonight. But what do you do the first time you hit a Bollinger Band? Take the course, and you understand what I'm not going to say it. I'll let you figure it out. I teach it exactly what's there. As I said, copper is fighting a battle here. It's fighting a battle to stay over the 18-day average. It came down to it 2 days ago. Today it bounces. Tonight it's up again. But it's not trending. Rather, what seems to be happening is the Bollinger Bands, the black lines, are wrapping their arms around the market, trying to take volatility out of it. You have the bias up. Momentum is overbought. Any reading over 70 on a slow stochastic, I consider overbought. Difficult market to do anything in. We talked yesterday, this was Monday night, that if the market falls from here, look for the Bollinger Band to be your support in this market. You tell me what it did. It got within $2 of it, holding it. We'll see what it does after this. Are we getting an embedded reading? What's an embedded reading? Well, I'll give you this little education. You have to have 3 days in a row where numbers in the slow stochastic are staying under 20. So it did it today. It's doing it tonight, but you're not through. You don't know what is going to happen for Wednesday trades. So let me come back to this. You have Monday trade where both numbers are under 20, not on Friday. Tuesday trade, both numbers under 20 on the settlement, and tonight. They're there, but you got to close and keep it there. If you do that, then the odds favor you're going to drop again in that market to challenge that potential number. When you lose the embedded reading with the red line closing back over 21, like on this, then I'd get friendlier. We were talking here last night. This is Monday. You're in a major support zone. This is where I think the pros are taking their money off the table. I'm certain I said that. Did we have an embedded reading? Day one, watch. Right here. Day one of embedding, Tuesday last week. Embedding. So you got your embedded reading. The odds favor you're going to make your run down here, which you did, and you can see you're trying to bounce away tonight from that. Unfortunately for this market, until the red number closes over 21, rallies back up to probably the 200-day average, or probably a number the pros will look at to get short against until that number, the slow stochastic, closes over 21. The dollar index now I don't think is tradable. I was expecting it to wrap its arms into the prices of the top and bottom Bollinger Band. That's what I think it's doing. So now I'm expecting this, where the market just spins around in there, not going anywhere for a while. You put it together, you try to come up with a game plan, and that's why I think these stochastics are so important. You look at a chart and you don't naturally see where support might come in. This algorithm, and that's what it is an algorithm, has a way of working with the market because 95% of the time the market will trade within the bands. Logic says first time it hits it on the upside or downside, that's what you want to work with. I modify my bands a little bit. Subscribers to my research, I'll be willing to give you the formula. You change it if you're not using our charting software, and you put it on yours. In the meantime, here's how you learn about that. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.